this exercise in workshop 2, we're going to be looking at the different inventory valuation techniques, FIFO, LIFO, weighted average, employed in a business that uses the perpetual inventory method. Remember, in the perpetual inventory method, changes to inventory are entered into the accounting system after every inventory transaction. So purchases and sales of inventory would affect the balance of the inventory account. In addition, in the perpetual inventory method, we're going to calculate the cost of goods sold for each sales transaction. So we're going to be using the same facts that we used in our demonstration for the periodic method. That is, we're giving a beginning inventory, we're told about purchases, we're told about sales. Unlike the periodic method, we're going to have to record these changes as they occur in the accounting information system. So on our spreadsheet, we have different columns that give us the data for the purchases in both the number of units, the unit cost, and the total costs. Gives us data on sales, but allows us to use the different purchase dates to calculate a cost of goods sold. From each layer of inventory, we'll take the number of units coming from that layer, the unit cost and the total cost, to determine our cost of goods sold. Finally, our last set of columns looks at what's going on in the inventory account, and we'll use layers for each, and at the conclusion of each inventory type transaction, either a purchase or sale, we're going to use those layers to determine the ending inventory. So our inventory layer at the beginning of the exercise is just our beginning inventory, which is 2,000 units at a cost of $6.10 for a total cost of $12.20. So at the beginning of our inventory account balance is $12,200. Our next inventory transaction is a purchase on August 8th. So our inventory layer will have our beginning inventory, plus the August 8th purchase. So we have 10,000 units at $5.50 each. So our purchase was for $55,000. Our ending inventory is our beginning inventory plus our purchase August 8th. Inventory balance after the purchase is now $67,200. We're leading off with the FIFO method. So when we have our first sale on August 14th, we're going to go to the earliest layer of inventory prior to that sale. We sold 8,000 units. So our beginning inventory will be fully used up, meaning we're going to have to go into our August 8th and make up the difference between our sales of 8,000 and our beginning inventory. We're going to use 6 of the 10,000 units from our August 8th purchase to calculate our cost of goods sold. So our cost of goods sold is going to be $45,200. Now, let's see what our ending inventory is. Well, we have nothing left in our beginning inventory. So our ending inventory will only have one layer, the purchase of August 8th. And we originally had 10,000 units. We used 6,000 for the sale, so we have 4,000 units remaining, $5.50. So our ending inventory after the sale will be 22,000. Our next inventory transaction is the purchase on August 18th. So we have our August 8th purchase and our August 18th purchase in our new inventory layers. So we bring down the August 8th figure and we add in a purchase of 6,000 units at $5 each for a total of 30,000, and our new ending inventory is going to be 52,000. Our next inventory transaction is a sale. We sell 7,000 units. Again, we're using FIFO, so our earliest purchase is from August 8th. August 8th purchase is our earliest layer of inventory. We're going to sell all 4,000, and we're going to use a valuation of $5.50 to calculate our cost of goods sold. And we're also going to need 3,000 units on our August 18th purchase at $5 each. So our cost of goods sold will be 37,000, and our new layer of inventory will only consist of our August 18th purchase. We've used up all of the August 8th. We have 3,000 units remaining. We started with 6,000, sold 3 at $5 each. And our new ending inventory will be 15,000. Now at the end of the period, we will determine our cost of goods sold from the 2 sales transactions, and our ending inventory is our last valuation of 15,000. So that's how we apply the FIFO method to the Perpetual inventory system. I'm going to make a separate video for the LIFO and a separate one for the cost.